Hello and welcome to the Fibonacci free video for Monday, August 29th. This is David, and we are still looking at the S&P 500, especially as we've gotten now one of the signals that we've been talking about for a few weeks that would signal potential return to a bear market, which is this break of the 4083 Voodoo fireline. So you may remember that we've been looking at this, especially here last week, and noticing that this coincided with several other Fibonacci levels that would cause us to be cautiously bearish on a break of this level and remaining that way so long as we stay below that level. And the reason for that caution is that we can't tell for sure that we are going to stay beneath that fire line, the most important of the Voodoo line levels. But there are some reasons to think that we might on a short-term basis, and that that resistance on a bounce, if it's going to be nearby resistance, is likely to hold at that level. So if we drill into shorter time frames and just look at the pullback from today's high into the swing low that we made on the close, right? And we just look to do an external retracement from that level, right? So just measure from that swing high to swing low, and where levels to the upside would be proportional to it, right? Generally, when we look to a return the other way after a pullback, right, that holds a prior swing, we're looking towards either the 1272 as a first target, or 161.8% of the pullback as a second target. Now, that's not to say there can't be a third target up at the 261.8, but these are the first two nearby that we usually find some action at one or the other, if only for a brief move the other way. And we notice that the 1618 comes in just a few pennies above that Voodoo fire line. So again, recognizing that things may not reverse to the penny, it tells us to look to this area for some resistance if we head up there, perhaps as a bounce originating tomorrow, and that if we get well through that, that we might very well have at least a bigger bounce on our hands, if not a turn back up. We can also look as well to measuring the leg up from today's low to today's high, projecting upwards from this pullback low. And notice that equal legs up, which is where we often see corrective or counter trend moves run out of gas, is a little bit below that fire line, and the 127.2 clusters nicely with the fire line and the external retracement that we just looked at, all sort of tight in here. So so again, I would look for us to stay on below this level on a short-term basis if we're heading directly down. Now, if we get back above the fire line, it doesn't mean that we're heading back up above the high from 2 weeks ago, although we certainly could. And so that's where things get a little bit tricky. What I will say is that that if we bounce higher and subsequently break the fire line solidly again, I would still be bearish on that break. We have to do a lot more work to figure out what would turn us bullish and add some more color to the Voodoo roadmaps, which I think would paint the path forwards, whether it's higher or lower. We'll dig into some of that in the premium video. So thanks for spending a little bit of time with me, and I will see you at the next update. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.